Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. If you have questions or topics that you wish to discuss, please chat that over now so that we can be sure to get to them all. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Again, welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, Mega Backdoor Roth Solo 401k tax reporting. What is and is not required. Please use the chat to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. Again, we would love to use this session to answer the questions that you have, so please don't hesitate to chat over questions. Also, if this webinar is helping you, please like this video as it'll help to get the word out to other solopreneurs, other advisors like yourself, who may be looking to catch up on their retirement savings. Thank you. So let's dive into the topic, which again is Mega Backdoor Roth Solo 401k tax reporting. What is and what is not required. So why this webinar matters? Common concerns with the Mega Backdoor Roth Solo 401k include fear of incorrect tax reporting or unexpected income. So our goal here is to provide clarity, compliance, and peace of mind. The Mega Backdoor Roth Solo 401k is one of the top reasons that customers set up accounts with us, with my Solo 401k Financial. So our role is we provide Solo 401k plan documents with the most advanced features, including the ability to make Mega Backdoor Roth Solo 401k contributions. But we don't hold or have access to any of our customers' accounts. At the same time, we help our clients open up holding accounts at the bank or brokerage of choice. For example, Fidelity, for example, Schwab, just to name a few. We've helped customers open up accounts at hundreds of different banks and credit unions, as well as different brokerages like Fidelity and Schwab. So in short, the clients obtain the plan documents with all the advanced features. We provide the ongoing compliance support, but the plan is totally portable, so they can open up accounts at the bank or brokerage of choice. So the custodian, for example, Fidelity, for example, Schwab, holds the assets, provides the accounts, but our plan documents provides the features. So the foundation in terms of solo 401k plans is eligibility. There are two elements or two parts of the eligibility equation. Number one, the solopreneur needs to report earned self-employment income on their taxes. That proves, that demonstrates that the individual is self-employed. Now, there are different ways to report earned self-employment income on your taxes. For example, if you are a 1099 independent contractor without a formal legal entity, or if you have, say, a single member LLC that's taxed as a sole proprietorship, earned self-employment income would be income reported on line 31 of Schedule C. Whereas if your business is taxed as an S corporation or a C corporation, earned self-employment income is W-2 wages that you receive from the S corporation or the C corporation. Lastly, if your business is taxed as a partnership, earned self-employment income would be income reported on line 14 of the K-1 that you receive from the partnership. The other piece of the eligibility equation is that the solopreneur cannot have any non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. Ultimately, the solo 401k plan may be ideal for consultants, realtors, freelancers, and other small business owners. Now, one of the top reasons that customers set up solo 401k plans with my Solo 401k Financial is that we support a plan that allows you to make Mega Backdoor Roth Solo 401k contributions. So what is a Mega Backdoor Roth Solo 401k contribution? Well, really, it's a two-step process. So you need to have plan documents that allow for both steps. The first step is making voluntary after-tax contributions. Number one, those need to be made to a separate voluntary after-tax account. And then number two, transfer the funds from the voluntary after-tax account either to a Roth Solo 401k, so inside the plan, or out of the plan to a Roth IRA. So you have to make the first step of making the voluntary after-tax contributions to take advantage of the much higher voluntary after-tax contribution limits. For example, the voluntary solo 401k contribution limit is the overall limit. So the solopreneur can contribute 100% of their self-employment income, dollar for dollar, up to the overall limit, which, for example, for 2025 is $70,000. For 2026, it's $72,000. So it's 10 times the Roth IRA contribution limit, for example, for 2025. Then step two, the individual moves the voluntary after-tax solo 401k funds over to a Roth solo 401k or a Roth IRA, so that now you have that potential for tax-free growth, just like any other money that's in a Roth account. It has that tax-free growth potential. So unlike a Roth IRA, where if you make too much money, you cannot make Roth IRA contributions, with a Mega Backdoor Roth Solo 401k, there are no income limits above which you can't make Mega Backdoor Roth Solo 401k contributions. So it's a two-step process. When you make that Mega Backdoor Roth contribution, step one, you're making a voluntary after-tax Solo 401k contribution to a separate voluntary after-tax Solo 401k account, and then you're transferring the funds from the after-tax Solo 401k account to either a Roth Solo 401k or a Roth IRA. Now that we've laid the foundation in terms of who's eligible to set up a solo 401k, what is a Mega Backdoor Roth Solo 401k and how it works, right? How it mechanically works, what the mechanical steps are. Now we can turn to what is the required tax reporting and what is not required. So let's start with the first step, the after-tax contribution. So voluntary after-tax solo 401k contributions, those are not reportable. So all contributions to the solo 401k are not reportable by the plan, regardless of the contribution type. Could be employee, employer, and or voluntary after-tax contributions. None of those contributions need to be reported by the plan. Now, some of those contributions need to be reported on the personal or business tax return. For example, if the solopreneur is making pre-tax contributions, those contributions reduce the taxable income for which the contribution is being made. And the way that it reduces the taxable income is that you report that contribution as a deductible amount on your tax return. That's how you reduce the taxable income. It could be deductible on the W-2 or the business tax return or the personal tax return. Just depends on the type of contribution, whether it's employee or employer, and how your business is taxed. But contrast that with voluntary after-tax contributions. Voluntary after-tax contributions do not need to be reported. They're not reportable on the personal tax return or the business tax return, regardless of how your business is taxed. Moreover, you don't need to report it on your W-2. So for example, if your business is taxed as an S corporation and you receive a W-2 from your business taxed as an S corporation, even making voluntary after-tax contributions, it's optional to report those on the W-2 per the W-2 instructions. But moreover, again, on the personal tax return or the business tax return, after-tax contributions are not reportable. So that's not what's not required. It's not required to report the first step of the Mega Backdoor Roth Solo 401k strategy, the contribution step. So now let's turn to the second step. So this is what's reportable. Not when you make the contribution, that's not reportable. But the second step, when you transfer the voluntary after-tax solo 401k funds either to a Roth Solo 401k or a Roth IRA. So that transfer, that is reportable by the plan. So it's reportable on a Form 1099-R issued for the plan. And it's reportable not for the year for which the contribution is made, it's reportable for the year for which the conversion occurs or the transfer occurs. So the contribution deadline for voluntary after-tax contributions is the business tax return deadline, including any timely filed extension. So here in 2026, many customers are still making 2025 contributions, including voluntary after-tax contributions for 2025, but deposited in 2026. So they're making that first step, the contribution in 2026, which necessarily means that the second step won't occur until 2026 when they transfer the after-tax funds either to a Roth Solo 401k or a Roth IRA. So even though the source of the funds might have been contributions for a prior year for 2025, because the transfer to the Roth Solo 401k or the Roth IRA doesn't occur until 2026, that is reportable, but it's reportable on a 2026 1099-R. So the 1099-R is issued for the Roth conversion only. Oftentimes it shows $0 as taxable. Why? Because the source of the money is after-tax money. It's basis. Now, there would only be a taxable amount if there had been gains that accrued inside that after-tax account before the funds were transferred to a Roth account. But most folks will want to transfer the after-tax funds to a Roth account shortly after the contribution. Why? Because gains that accrue inside that after-tax account are taxable. But gains that accrue inside the Roth account, those are tax deferred and ultimately tax free if when the solopreneur ultimately withdraws the funds from the Roth account, they would draw the funds as a qualified Roth distribution so that it's even the gains are totally tax free. So for example, a qualified Roth distribution from a solo 401k, a Roth solo 401k would be once the individual has had that Roth account for 5 years and they're at least 59 and a half years of age at the time of the distribution. So how does my solo 401k financial support you? Well, number one, we offer a solo 401k plan that allows for Mega Backdoor Roth solo 401k contributions. We were the first solo 401k provider in the marketplace to offer a plan that supports the Mega Backdoor Roth solo 401k contributions. That means no one has more experience than us in helping customers through the required steps and helping customers understand, for example, and educating them on the contribution limits. And then, of course, we handle the ongoing compliance support. In other words, the Form 1099-R preparation and filing, we handle that for no additional charge. Customers or their advisors just need to submit the information to us in a timely fashion. And they can do that quickly and easily on our website 24/7 at mysolo401k.net/forms. Because we don't have access to the accounts, we don't know if funds are being transferred from the after-tax account to the Roth account until the customer tells us. But again, you can do it quickly and easily. It's just a 1-minute form on our website to let us know, okay, I transferred X amount of dollars from the after-tax account to the Roth account. Now that gets in our queue to prepare a 1099-R, which we would do again for no additional charge. So who does what? The client and or the advisor will make the contribution, move the money, right? We don't have access to the accounts. We can't move the money, right? Our plan is totally portable. So customers or their advisors, they're opening up accounts at the bank or brokerage of choice. Then the information is submitted to us. So now we can capture the information and prepare that 1099-R, which we'll do that for no additional charge. We just want the information in a timely fashion. What is not required? Well, again, the first step is not required. There's no reporting when you make that after-tax contribution. It's only the second step when the funds are moved from the after-tax solo 401k account to a Roth solo 401k or a Roth IRA. So final takeaways, Ultimately, the Mega Backdoor Roth Solo 401k is straightforward when structured correctly. Again, you choose the bank or brokerage. We don't force our customers to go to any specific place, so we're super compatible with customers or advisors who want to have the accounts at a specific place. Or where our value comes in is offering the plan with the advanced features and the ongoing Solo 401k compliance support. Okay, wonderful. Again, if this information is helping you feel more confident about your future, please take 1 second to like and subscribe, whether you're on LinkedIn, X, YouTube, Instagram, as that helps us to get the word out to others just like you who might be looking to make Mega Backdoor Roth contributions themselves. Also, we invite you to subscribe to our channel. Subscribing guarantees that you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. We also want to take a moment to invite you to our community, mysolo401k.net/my community. It's the largest community of solopreneurs, advisors around these topics, which means there is vibrant forums, there's a library of videos and webinars. It's totally free to join, all are welcome, so please don't hesitate to join. Again, mysolo401k.net/my community. All right, that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this Solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.